Thank you for joining this Fifth Era webinar. Today we're going to talk about the emerging leaders of what we're now calling the autonomous digital economy and future. These are the emerging category leaders beginning to emerge from AI, blockchain, and internet-related areas of technology. As always, I have to remind you that this is a educational only webinar. We are a SEC registered RIA. We will not be soliciting for any of our funds or investment opportunities, and you should not be relying upon this webinar for investment decision making. Who are we? We are a specialized asset manager. We're focused on exponential technologies. We believe that we're entering a period of unprecedented innovation. You'll hear more about this later in this webinar. We call it the fifth era, and we believe that every industry and business is being dramatically impacted. And we'll talk specifically about some of the technologies and companies that are making that happen. In the US, we are SEC registered. We are appointed representatives in the UK, and also our funds are registered in Switzerland. We've been at this for a long time, 13 years since we pivoted entirely to focus on this space, but there's another 10, 15 years prior to that when we were internet, fintech, and digital content investors. We manage 8 funds and a little over 600 million. And on the bottom row, we're very excited to be a participant in many of the emerging unicorns, and we'll talk about that too. Our value proposition is very straightforward. Our investors can participate with us, get access in a highly diversified way to early stage AI and blockchain ventures, all on an institutional platform. These are many of the unicorns that we already have exposure to. Some of these are household names. Many of them are beginning to go public, and we think you'll hear a lot more about some of them in the future. The Krakens and Upholds, Securitizes, Tethers, and so on. Our general approach to investing is three-part. We look for diversified early stage exposure through our funds. Then we track everything that we have exposure to, and we watch for the emerging category leaders of the spaces begin to surface. And when we think we have identified one or more of them, we do direct concentrated investing in the mid and late stage. And that's part of the reason why we're doing today's webinar. It's part of our process to constantly be looking out for which are the companies that are really surfing on new innovations and technologies and benefiting from them in building value in their respective areas of focus. This is a page that many of you will have seen. We used this decades ago. We wrote a book on the topic, and it is our view that the world is entering a period of unprecedented innovation, which is really driving most of the world's value creation. And we call it the fifth era primarily because we don't want to call it the industrial era. And the industrial era was the fourth era. It's our view that what's happening now is taking us out of the industrial era. And we could talk more about that if we wish. We won't today. It's really powered by a host of innovations, but the big three that seem to be capturing most of the value right now. One is the rise of a fully global digital economy on the left. The second is the continuing rolling out of the global life sciences driven changes to medicine and food and animals and human activity. And the third is moving to a carbon-free economy reliant upon new energy sources. We focus almost entirely on the left-hand side. We focus almost entirely on digitalization, and that's what I'll be talking about today. We've felt for a while, and we were told many years ago by Mark Andreessen, that software's eating the world, and it was coming in a series of waves. We think we're right in the middle of that. We think there's a lot more that software can do to improve the way the world's economy works. And on the right-hand side, just to give you some examples, even as we sit here today in 2026, most of the global economy still runs on very old legacy systems. Financial settlement takes days, identity is heavily siloed and drives vast amounts of time and effort in things like KYC, AML. Data ownership is unclear, and that raises issues around IP management and rights and whether data is what it purports to be. And trust is reliant upon expensive and slow centralized actors. We're not using software to manage value over the internet. A lot still has to be done. And we think that's really what the next phase is about. In the next phase, software is going to be used to solve these very important challenges and issues that we have in the global economy. And not only will software make the rails run better, but we will also begin to digitalize intelligence itself, which is what we're calling the autonomous digital economy, the rise of something that is not only software enabled, but where software is doing much of the work. And that really leads to our investment thesis. Those of you who have known us for a while know that 10 years ago we wrote down our investment thesis. We've continued to look at it. We have tweaked it recently. And it's as follows. The internet digitalized communications and content. We all know that. We rely upon it every day, as does every business and player around the world. And it was the greatest value creation event so far. It drove most of the alpha of the last 20 or 30 years in public and private spaces. However, we have not yet digitalized value and intelligence, and that means we don't really have an advanced digital economy. We use it in some ways, but we have to go off the internet to complete our work and our activities. So we're now in the process of digitalizing commerce itself. And there's three big building blocks of that. We have to digitalize trust so that value can move over the internet. We're digitalizing intelligence and decision making. And of course, we're beginning to stand up digital autonomous actors or agents to do more and more of our work. And as we complete that process, we will see the emergence of an autonomous digital economy, and it will drive more value than anything that we've seen before. So that's our investment thesis. That's what we focus on. We don't have to be completely right, just as clicks and mortar is still not 100% clicks, but still unlocked most of value than we've ever seen before. So we think autonomous digital companies and players will capture much of the value of this next time frame. Another way of thinking about this, if you're new to this thought process, is to really think about the convergence of three big blocks of innovation. The first is the internet technology stack, which we've become quite familiar with, which digitalize communications and content. The second is the blockchain technology stack, which has allowed for the digitalization of value, identity, provenance, and trust. And then the arrival of another technology stack, the AI technology stack, which is allowing us to make better decisions based upon algorithms and learning and unleashing now agents that can do work on our behalves. As these three things converge, we've got very interesting areas of innovation. Just to give you a couple of examples, as the internet and blockchain has merged, we've seen the rise of forms of value, CBDCs, stablecoins, and increasingly digital assets that can flow across the internet in almost real time at almost no cost. And hundreds of billions of dollars are now being enabled by these new forms of financial value, essentially digitalized monies, commodities, and assets. Or to use another example in the top right-hand corner, as the internet and AI are converging, we're seeing the rise of smart decision making around internet applications and use cases. So chatbots to support service, customer service, and decision making. Or these are mostly fintech examples, credit tech, lending tech, risk tech, actually taking away a lot of the decision making and doing a lot of the heavy lifting around whether or not to extend credit or make a loan and so on. These are just examples, but what these things are converging towards in the center is some very powerful features that we need. Verifiable transactions and actors in everything we do, clear, self-sovereign identity that is, and I'll talk more about that in a moment, that enables reusable, portable identity, much more secure, cryptographically secure ways of doing things, and then a level of immutability and trust protocols that we haven't had to date. So this is another way of thinking about this great convergence that is occurring and why so much value is being unlocked today. The last time we saw anything like this began 25 or so years ago, where the internet was standing up a whole new set of companies. And today, those are the most valuable companies in the world. And you know their names. 9 of the top 10 most valuable companies in the world are clearly now internet powered. And in fact, all of the companies on this sheet would put up their hands and say we use the internet in everything we do. But obviously, the companies with the blue circle around are unequivocally driven by the internet and the digitalization of communications and content sharing. That was the greatest alpha of the last 25 years in the public markets. But as we know, much of the value was captured earlier in the private markets. Now we're seeing the rise of new applications and use cases that are, if you will, examples of autonomous economic systems at work. This page, I can't go through it all today, but these are 6 live examples of startups we've seen recently that are leveraging all 3, the internet, AI, and blockchain in order to bring new solutions to market. And I'll just pick 3 or 2. I'll probably just have time for 2. In the top left-hand corner, autonomous treasury management. Most companies have a treasury. Most treasuries are managed by people, the CFO or the treasurer, and it takes them a lot of work to try and figure out where's all the capital and the assets of the corporation, what are the risks and returns, and what are the right levels of capital to hold in any particular cell to meet requirements that might be liquidity or yield related. We're now seeing companies that are putting in place autonomous treasury management agents that take all of that information in real time, constantly rework the corporate treasury, identify how to optimize it for whatever objective function you set, which could be for yield or liquidity or a combination of the two or other factors. And this is real decision making that is leveraging, obviously, information flows, internet-based information flows. Obviously, the agent is highly digitally intelligent, and they're also using blockchain-based solutions as well to try and execute if you have a large portion of your assets in liquid traded assets that are available on those platforms. So this is an example. I think it's an interesting one because every company does have a treasury. It's a horizontal example. Content and IP monetization, the middle of the right-hand page, is the second example I'll use. It's a real example. In the world of IP, which could be film or music or book or other content related, one of the biggest challenges is to ensure not only that you're getting paid for your IP when it's used, but also that you have all of the contracts in place with all of the potential users of your content, and that you also know how to track down the infringers and hold them accountable. And that is a huge amount of work. Most people don't do it very well. Most IP content creators never get full monetization for the use of their content. And so this is, again, an agent-driven autonomous solution in which, on the one hand, you tell the agent all of the content you own. The agent then goes out and negotiates content licenses with those platforms through APIs that do provide that as an option. And obviously then keeps track of the usage of your IP and ensuring that you receive what you're owed. But also, this is also connected to infringement-oriented platforms. So through the use of, for example, image recognition systems, the AI agents can constantly scrape the internet, look for uses of your AI that is not unlicensed, and then send out the letters to those people threatening them with court cases if they don't pay you, etc., etc. So not only establishing and running a content and IP monetization platform, but then also looking for the breakages and the illegal uses of content. It sounds easy to say, but the amount of work in what I just described, where people trying to do it, would be almost beyond comprehension. Very few people, even the largest corporations and content owners, have effective global content and IP monetization systems at work, and they are very hard to operate with a lot of people and process involved. So these are two examples, but it gives you a flavor of what we're talking about when we're searching out for the emerging category leaders of the space. They're going to be people that can put together mashups, if you will, of technology to create new solutions such as these. Now, there are some very specific things that need to change for us to get to what we're describing. And I won't go through this in great detail today. Some of it we've talked about in the past. Clearly, we already know that every database in the world is going to need upgrading. It's going to have to be upgraded just because of the crypto security issues associated with new computing capabilities, including potentially quantum computing. We're at a point now where most legacy databases are not sufficiently secure to be reliable in a world of much more powerful computing. So we have to move the databases up to verifiable state systems where we actually have systems that mathematically prove whether or not the content is what it's supposed to be. It hasn't been corrupted, it hasn't been breached, it hasn't been phished or scammed or other things. Along the same theme, we know that we need to update identity. You're all very aware of how many times in a month you get asked to fax or photocopy and send your passport. That's not fit for a digital world. We need digital solutions for identity, not just for people, but actually for devices and content too. We need to know whether an agent is what the agent purports to be, and we need to know the information that we're being shared with is the information we're expecting, and so on. So upgrading identity is a major piece of this. I've already talked a bit about security. If there's one thing AI is going to be very good at, it's overwhelming our defenses with inbound bad actors and bad practices. And that's before we get the issue of underlying cryptographic protection systems being potentially hackable. So we know that we're going to have to upgrade for security purposes as well. And provenance and immutability, audit trails, things of that nature is obviously a very important feature that we don't really have today and that we need. So these are examples. We also are going to have to be able to do things faster, cheaper, and easier, as always. But have this in your mind. This is why the legacy players cannot automatically win. So if I didn't have this page and if I wasn't presenting it, you might ask the question, well, won't Microsoft, IBM, and Oracle win in the standing up of autonomous digital actors? And the answer is no, not necessarily, because they have to upgrade all of their own software and legacy applications. And this is a whole new world. We've seen this before. Mainframe software engineers didn't necessarily become the best at cloud-based software development. Cloud-based software engineers are struggling to get to grips with the new world of software. And it isn't by surprise that if you look at the leadership of most of the leading AI companies and most of the leading blockchain companies, you'll find that they are typically in their 30s or early 40s. It's a new era of software development skills and capabilities. So now what I'm going to do is I'm going to get to showing you the names of companies that we think are out ahead. And I'm organizing this into two groupings, the blockchain companies and the AI companies. I think many of you know our heritage was blockchain first. We're getting our heads around all of the emerging category leaders. These are some of the use cases. And they are organized, we've organized them around the same investment themes we've used. So this is the simplified blockchain IT stack, a foundational layer, transactional layer, application layer, and we have sort of organized the names around these same tiers. It's a little bit artificial because some of the leaders operate across multiple tiers, but it'll give you a better sense of where we are. So what we've got here in the bottom is the foundation layer and some of the names of some of the players we're tracking. In the top right-hand corner, the transactional layer, which at least for blockchain is a lot about the movement of value over the internet and the infrastructure required to support that. And then on the left, we have the application. I would have liked to stack it, but I couldn't get it all on one page. So down at the foundational layer, we have people that are building fundamental architecture and technology to enable the movement of value, as well as the things I described to do with identity, database management, provenance tracking, and so on. And these are some of the names. Their rough valuations are shown on the right-hand side. Stripe is a traditional fintech that's become exceptionally good at digital money and asset support as well. And clearly a company that we've all been waiting to go public for a long, long time. Some of the next ones are developer and node infrastructure to enable developers to use blockchains in the solutions they build. So Alchemy is an example of that. Starkware doing something similar, but Ethereum focused. Ava Labs, more Avalanche focused. Aptos building the same infrastructure for Aptos. And then we have some Bitcoin mining related companies, Bitmain being the largest builder of ASICs, custom ASICs for Bitcoin mining, originally Chinese company, also providing much of the hardware that the world uses to support blockchains, and so on. So you may not know all of these names. This is not intended to be complete. These are examples. But these are companies that we think could well turn out to be very important as we digitalize value and make it fit for an agentic autonomous economy. In the transactional layer, you'll probably know a lot more of the names, maybe all of them, because they tend to be B2C focused, at least today. On the one hand, we have the digital custodians, the digital wallets, the digital exchange platforms that began with crypto, but now they're adding in traditional financial products, public equities, things like digitalized money market funds and other digitalized commodities, gold, and so on. And they have names that are well known, I think: Binance, Kraken, Upbit, KuCoin, blockchain.com. These are all private companies. So on this page, I should have said that before, we don't have the public companies, the Coinbases of the world. We're focused here entirely on private. And then we also have issuers of monies, commodities, and assets in this category. So a Tether or a Ripple might be examples of those. We also have a few infrastructure providers at the custody level. Fireblocks is here, Anchorage isn't far behind. So we think that these companies have the right to create infrastructure, wallets, exchanges, and custody solutions that will allow for agentic to agentic movements of value and money, as well as that for enterprises and humans as well. And then on the left-hand side, up above all of that, we have certain applications being built. You can debate whether something is in the transactional layer or the application layer. We've added in Revolut, which is a traditional fintech, which is widening out its focus to get involved in more of what we're talking about. Kalshi and Polymarket are obviously examples of new capabilities unleashed by this area of convergence, prediction market companies. And then there's others here that we could go through. Some of them began as NFT companies when that was hot, but they actually built infrastructure to enable the holding, trading, buying and selling of digital assets. And so conceptually, they have infrastructure that can be used for any asset, not just for a crypto asset or an NFT asset. So these are examples. We're monitoring all of these. There are others that aren't on this list, but it gives you a good flavor, I think, of some of the leaders that we think are going to be very important. Now, in the AI space, there's just as an important transition occurring. And it's not that big data analytics or machine learning are new. They're not new. They're 40 and 50 years old. But the software clearly now has reached a point where it can enable much more than we've ever seen before. And I do believe that traditional technology companies, the IBMs and the AT&Ts, are not necessarily well positioned to get on top of this. They're trying some of them. So Google and Microsoft have been showing a lot more ability to bring in engineers and begin to stand up or work with LLMs and so on. But this is not going to be easy for a traditional technology company to get on top of. And the reason is that there's a whole new technology infrastructure here, new languages, new protocols, new software approaches, as well as the rise of agentic software development as well. So a lot of newness here, and I've already talked about how the engineers that seem most on top of this typically are in their 30s. We've seen that before. Software engineers find it hard to reinvent themselves every decade, and many of them end up falling behind the power curve of software development over time. So here's a similar page. Thank you, Acadian, for helping with this page. On the right-hand side, infrastructure and tooling. The first three companies you'll all have heard of, OpenAI, Anthropic, and XI. I think we have to recognize that they are ahead in terms of the LLMs they've built, and the valuations are also very high as well. But when you cast your eye down on the right-hand side to other infrastructure and tooling companies, maybe you don't know all of these. Vast, ClickHouse, Crusoe, Lambda, Base 10, Anyscale, and so on. We're getting to know them. I would not say our team knows all of them deeply yet, but it is our belief that these are all very fundamentally important infrastructure companies in the direction we're heading. On the left-hand side, we've split applications into horizontal and vertical. Horizontal being applications or middleware that is used across potentially all industries, and vertical tends to be more defined by industry-specific areas. Again, this is not comprehensive, but just to give you examples, if you looked at Harvey in the vertical section, they are attempting to be the AI assistant for all legal industry participants, allowing you to research, draft, and contract at the level of a fully compliant legal document. Now, we all know that law has been very paper and people intensive. We get charged a lot for what is edited boilerplate. In this particular case, Harvey creates the boilerplate. You can still edit it afterwards. And so lawyers can still charge whilst having Harvey help them in the background. But obviously, it holds the promise that one day we can all be lawyers creating our own documents much more quickly and cheaply for most purposes. It's an example. And Abridge is similarly an example. By the way, it's an example with a 9 billion valuation on a lot of business today. Abridge is another example focused on healthcare. It turns out that, at least in America, every time a patient meets a doctor or nurse, you're supposed to write something down. Doctors hate it, nurses hate it, uses up too much of their time. And now AI-powered scribes can write the notes. The doctor or the nurse simply needs to edit them afterwards. And it does unlock a lot of time. And in fact, in most industries, when you actually look at what frontline staff do, far too much of it is administrative and back office oriented. So if the agents can take over that work, theoretically, at least the frontline professional gets to spend more of their time doing what they're supposed to be doing. So anyhow, and then you can go down to the horizontals, the main difference being they work across multiple industries. Some like Cursor and Lovable, you probably have already heard of. Some of them you may be less familiar with. So these are the emerging leaders. It does not mean they will all lead and succeed. We are very used to a high failure rate in the private markets. But I think for us at least, getting our arms around the emerging category leaders is really what drives the mid and late stage investment decision making. We're very happy that we are an investor in so many of the prior page, the blockchain unicorns. I could have mentioned that on that page. A majority of them we are already investors in. But when it comes to this AI space, this is where we're focusing our new fund and our new activities to gain more exposure to the AI leading companies too. So beyond all of that, we are now seeing the rise of agents. And if you wanted to be a leading company in an autonomous future, you would want to be very good at moving information, moving content, making decisions, and being able to facilitate the movement of value. But you'd also want to be agent powered. And it's a ways before I think we'll have companies that are completely agentic in nature. But I think it's also fair to say there's no large company in the world today that isn't already experimenting with agents in their businesses. And you see those announcements every day. I think we'll be in a hybrid world, a clicks and mortar world, if you will, where agents will be working in the background, taking over work as they already are, chatbots and customer support agents and so on. But eventually they'll take on more and more of the core work of any enterprise. And it will be a new skill set to manage a company, to design, build, and execute a company that has agents as at the foundational layer. It will be very different than beginning with a workforce of 200,000 or 300,000 people and trying to move them to that future. I think it'll be a lot easier for the de novo disruptive agent-based companies to succeed than for traditional companies to manage such a complicated from to. And I think we're also seeing that in the media today. People are beginning to appreciate that Walmart shifting 1 million people to an agentic future is going to be very disruptive. So to show this chart again, here we've put some examples from the prior pages. These are not all of the companies that we think are well positioned, but it gives you a sense of where they sit. So the Anthropics and the DeepMinds are mining the intersection of AI and the internet and beginning to lean into the center, exploring payment solutions for their agents. Meanwhile, the Krakens and the Upholds and the Tethers are starting at it from their viewpoint, basically digitally enabled finance companies, but now they're building AI and agent capability and shifting into the center as well, and so on. So you can see the direction of traffic, if you will, and how people are moving towards this future. So just to sum this up, we think we've seen this before. Not exactly, but we know the alpha of the last 20, 25 years has been driven by software eating the world and the rise of the internet. And obviously, if we'd been doing this webinar in the late 90s, we would have been trying to identify the companies, and some of them would have been in plain view. Not all of them, but obviously Amazon and Google and Apple and Microsoft were in plain view back then. The Airbnbs and the Ubers and the Facebooks came later. So you can't, and we would not expect that all of the winning companies have yet surfaced, but you want to be as an investor in what we're doing right now in this process of trying to identify the emerging leadership. We believe they're going to come from one of three directions. They're going to be experts at digitalizing trust, blockchain-based digital finance. They're going to be experts at digital intelligence and AI, or they're going to be very good at autonomous execution and use of agents. And in order to win, they'll have to be good at all three. And very few companies today are good at all three. But what's also interesting is that there's a lot of enterprises with a lot of value who are not good at any of those three things. And we think they're likely to be the biggest losers. We do think the fifth era is more than just digitalization. We chose not to name it because we didn't know how to name it 10, 15 years ago. We knew it wasn't the fourth industrial revolution. We knew that for sure. It's not a continuation of the industrial revolution. It's becoming a little bit more apparent what it is. And this phrase, programmable civilization, I don't really like it, but it does capture some of it. The application of software to everything that we do as humanity and in our civilization, I think, is sort of capturing some of the essence. It's already begun, but it's got a long way to go. And we think it will be one of the investment themes of the rest of our lifetimes. So that's what we focus on here. If you want to learn more about our investment approaches, our strategies, our funds, and so on, just reach out to us at ir@fifthera.com. And just to close this down, appreciate you staying so long. Obviously, for some of you, this is an area you're already thinking about. If you're not, please do talk to us. We're spending 100% of our time thinking about this and positioning capital in what we believe is going to be one of the most important value creation spaces of our lifetimes. So anyhow, with that, I will close down this. Thank you for joining. And please, we look forward to hearing more from you. Thank you very much.